Hello, everyone, and welcome back to Your Finance TV to kick off your working week. As always, we have Brendan McCarty from Column E. How are you, Brendan?
I'm great. How you doing today?
Living the dream, buddy. Living the dream. Before we jump into this week's show, don't forget to click on that like and subscribe button below. We've just about passed 3,000 subscribers, so thank you very much for your support so far. All right, let's jump into it. As we wrap up the month, quarter, and first half of 2023, the S&P and Nasdaq and Dow have shown gains year to date. There is historical evidence that suggests that when the S&P 500 is up at least 10% year to date, as of the end of June, it is likely to end of the year higher. However, there are mixed opinions on whether the bull market will continue or if we should expect trouble ahead. Brendan, how do you think the second half of 2023 is going to play out?
I think I think I'm looking at it as trouble ahead, as the rally's been driven primarily by liquidity from the Fed, better liquidity since the banks, an increase in risk that followed that liquidity. So as liquidity turned, people started taking more risk, and earnings have risen very moderately on a forward basis. Even the trailing earnings, I think, are flat to down. So basically, in a way, what is driving this is solely at the discretion of the Fed in many ways. Typically, when I look at markets, it comes down to the following. You look at the liquidity, you look at earnings, you look at our investors taking more risk, and is there another factor driving returns? Well, right now, all of these are favorable. And are these all great factors to drive a market? They can for long periods of time. But what if liquidity drove the improved earnings picture because these analysts travel in herds? So when stock prices go up, they think earnings will follow. So they raised earnings forecasts. People took better risk because they saw the analysts raising forecasts. And then the market rises because all liquidity drove it. I know AI is one of the big factors driving things, but I don't know. I still am on the fence in that. It's one of those things. We'll talk about that another time. But one thing that struck me in the last few weeks, and we've been looking at retail and the three L's, and a lot of them have been breaking down. And if the economy is so hot heading into the summer, why would retail stocks be suffering so much? Because this is kind of a prime opportunity to start shopping, if you will. I know people go on vacation, and I know TSA travel is way up. So maybe they're just going on vacations and not spending. But retail is suffering. So an economy that has that's 70% of the consumer and retail is weakening, how strong is that a foundation for the economy? So basically for the second half 2023, I'll say this: rallies built on liquidity will have a direct impact on inflation. If that makes them fragile, because inflation and the PCE have been following each other. I'm sorry, liquidity and the PCE have been following each other. Liquidity turned, now the PCE is turning up. Well, we all know what the Fed doesn't like the PCE climbing. So let's just look at it this way. If the PC starts to climb higher, the Fed's going to be put back into action. And at some point, they're going to have to realize liquidity is a concern because it tracks. So I think the second half of the year, while the short term looks, the range is what it is. I mean, bulls are bulls, and they're doing very well. They've been doing very well since March. Like we have a range model that hasn't turned down, and I think it's only been down 2 weeks this year. Like it's been up since January 6th. Absolutely insane. But it continues to climb. So the price action is bullish, but the foundation isn't the best. So I think there's more risk to the second half than return, if you will.
Yeah, and some listeners, we all know, you and I have been around the block many times. We're getting to that summer trading period, right? Next week, for example, like the July 4 weekend, it's a weird week. It's like 3.5 trading days. You get a lot of people taking off, and that's when you get that summer squeeze / rally over the summer. So, and then obviously we've also next month got the last Fed until they take a month break as well. So, is it a skip? Is it a pause? Do we see another 25 basis point hike? Like a lot of questions still sit in it, but there are also things that can impact the market. But I think this last quarter could be the one that really changes things for people.
Yeah, it's going to be an interesting. There's a lot of hope. This rally's built on a lot of hope, a lot of speculation, because when trailing earnings aren't rising and everything else is rising around it, you're sort of like, all right, are trailing earnings right, or is everything else wrong? So it's kind of an interesting. it's going to be it will be interesting with consumers if I think the Walmart started reporting in July, right? Is that when I forget when or is it August? I can't remember, but it'll just be an interesting cycle ahead. I don't know. I mean, it's like Amazon stock turned. We had that in the 3Ls, but the others did. Like Abercrombie did too. I mean, I don't know. My daughter doesn't shop at Abercrombie, so I can't give you on that one.
Walmart reports in August.
Okay, so we'll get a
okay.
better through July of Walmart, what Walmart says, because that will give us a good idea of what consumers have been doing this summer. Maybe they're only just traveling in the air. I mean, TSA checks are exploding, so everybody's traveling in a plane these days. But they're not, like Airbnb was weaker. So who knows?
All right, let's move on to Bitcoin. And it's seen a surge in its price this year. With BlackRock applying for its Bitcoin ETF, many are anticipating that to be a potential catalyst for further growth. There have been references made to Bitcoin synergies with Tesla on this show, which has also seen significant gains this year. Cathie Wood predicts that Bitcoin could reach $1 million by 2030, and an ETF approval could potentially help her prediction. Brendan, do you think an ETF approval could be a significant factor in Bitcoin's future growth?
Well, it seems to me every time an ETF launches on crypto, BTC tops and goes down. I mean, we had a wave of them at 60,000. So well, look where we are today. Again, institutions are late to the party on this one. There's been no liquidity in crypto, in Bitcoin specifically, through this whole rise. Like we have a model that we use. It's a liquidity model because Bitcoin is based on, we think, liquidity. Because more liquidity is negative for the dollar, so take crypto higher. And it's been bullish since last fall, but BCT wouldn't rally. And I wondered if it was just lack of institutional support. I don't know. But trading in this product has not been the easiest thing. Like there's been no liquidity. Like you're looking at like 30 very low trades per contract. How many contracts per trade? Sorry, can't seem to speak this morning. It's been low. So it's like, where has everybody been watching this thing go up? And then now they launch an ETF at 30,000. Come on, really? Now, Cathie Wood $1 million prediction, I did a little thought. I mean, I don't know why Cathie continues to get press, but whatever. So I did a little thoughts experiment with her. I looked at gold from the 70s. Gold rallied about tenfold. So it went from 100 to 900 and then fell to 250. Well, for crypto to rise to 1 million, it would need to rise, I don't know, 30-fold, if I'm not mistaken. And are we seeing runaway inflation, a collapsing dollar, and everything else happening? No. Is there any support for it to climb to that level? The technology is not even that good on Bitcoin relative to Ethereum's blockchain. So I don't know. But I'll say this, the fundamental have supported crypto from rising. It almost broke last week, but bounced. So I think the long-term support for this is wavering. Price action got over 30. It's bullish. I mean, the bulls are on the rise. I just find this comical that they now decide they're going to launch an ETF when it was down at like 15,000 for, I don't know, 9 months. I know it's all about interest. You launch an ETF when there's interest, but anyway. As for Tesla, it's interesting. When Tesla outperforms Bitcoin, so if you ratio them, when Tesla starts to rise quicker than Bitcoin, Bitcoin tops. Well, Tesla's rising more quickly right now than Bitcoin is, and Bitcoin might run into a little resistance here. So long story short, the short-term chart over 30K, and that is constructive for the bulls. The fundamentals are still supportive from the liquidity side. I mean, this rally has been, what are we in June? This has been a 9-month rally, really. So we might be coming to an end, or at least coming to a pause. To 1 million, I doubt it. I don't think it's ever getting to 1 million. Cathie can make that bet like she's made every, great bet, quote unquote, in the last few years.
All right, let's just leave that alone. Leave you and Cathie alone. We're going to move. We're going to look at some earnings for Walgreens, and they announced on Tuesday pre-market. Company's had a challenging year. It's down 23% over the last 12 months, and only 3 analysts have a buy recommendation on the stock. However, when compared to CVS, their performance is pretty similar. Brendan, why do you think there is little enthusiasm for pharmacy names like Walgreens? Could they surprise us with their earnings report this time?
So the problem with again, I've been using this new site to look at company fundamentals. It's kind of interesting. What stuck out to me is a couple problems with WBA, and I don't know if CVS has the same ones. I probably should have looked at it. First, growth metrics are all lagging behind their competitors. So right now we're in a market where returns are skyrocketing. People are buying growth stocks. That's where they want to be, right? Well, WBA is not growing. They're in fact slowing down, if anything. Second, if you're not growing, you better not have a lot of debt, and their debt load to cash flow is very high. They're carrying a lot of debt. It's based on all these purchases. What they buy, the boots, and they merged and create a whole bunch of debt in the process. That debt load becomes a factor if earnings are not rallying significantly. I mean, that's what it comes down to. Long story short, it's generating less cash going forward to cover its debt. That's why the stock has come down. That's the first thing. Second, it's a staple. It's a safety stock you buy when a port in the storm, so to speak. Well, not really anymore based on the debt, but I mean it carries a beta of 0.72 to the S&P, so it's not going to follow the S&P's returns. In fact, it's gone the exact other way. So that tells me that the debt is a major focus. For forward earnings estimates, though, look like they're on the rise, and you wouldn't know it by the analyst community. They're not talking about the stock much. But if you look at the forward numbers, they all look like they're higher than the previous year. So to me, that argues that maybe things are turning for the better and people just aren't paying attention. The chart did turn a couple, 2 or 3, 4 weeks ago, bounced higher and then got drilled last week, heading into this week. I don't know if people are worried about the earnings picture. I haven't seen news that would, maybe there was something in the market that argued you sell healthcare. I don't know. I know that a lot of small and mids got slammed last week, and everybody ran back into the largest to hide. That could be a factor. I'm not sure what Boots' market cap is, but or Walgreens, whatever. Long story short, the picture's starting to improve, but if they don't start showing more cash flow for their debt relative to their debt picture, I think the stock will continue to struggle. So I think the market is pricing in the slight chance that a beat is coming. But if they say they don't have the cash flow to cover their debt, or they have less cash flow to cover the debt, the bounce that we saw over the last few weeks will just disappear.
Okay. I was just looking at the sterling, and I haven't looked at it in quite a while. It's back up to 127. It's actually a little bit better on the year. I wonder I wonder if that's an impact on the Boots side of it. Boots obviously a big pharmacy in England.
Yeah.
Pretty well everyone uses that. I wonder if that had an impact on the earnings in the past, and maybe I might get a cheeky little surprise. I don't know if the company hedges or anything like that, but that could be a factor.
Pound's the strongest currency that I look at right now. I mean, it's outpacing the euro and obviously the dollar. It's been powerful though. Even when the dollar was bouncing back, the pound wouldn't fall. So I don't know what this effect is, positive or negative. I guess they could sell more drugs in pounds or less drugs in pounds. I don't know.
That's right. At the end of the day, at the end of the day, they just be making more money in pounds and it's stronger. You're making more money back in the US for the parent company, right?
Yeah, fair point.
All right, I want to have a look at Sigma Lithium. It's code for that stock, symbol for that stock is SGML. And they had earnings a couple of weeks ago, but did miss estimates. It's a tightly held stock with private equity companies holding majority stake, and they have a vested interest in mining lithium, a vital component for EV batteries. While lithium prices have rallied from their lows, they are still significantly lower than they were in November, close to half. Brendan, what do you think the future holds for lithium prices, and could Sigma Lithium be a benefit from this?
So I said to you before that I thought lithium looked like natural gas from the boom 20 years ago. And it didn't even occur to me until after we started talking that natural gas and lithium tracked each other last year into the peak, if I'm not mistaken, for natural gas, and then they both fell uniformly. I couldn't figure out why one was tracking the other. I still don't know why. It's just kind of a curious little correlation. But I'll say this. Analysts are expecting SGML to triple its revenues and triple its earnings over the next 2 years. You only do that by either significant demand or a significant gross margin increase, if you will. They're looking at it from a significant demand and a decent drop in gross margin. if you're lithium, I mean, basically, if your gross margins are falling, that means your costs are rising. That means maybe your cost of product is rising. So I'm guessing that the analyst community is actually expecting a positive price outlook going forward on lithium, only because they expect their gross margin to fall. Conversely, if they're buying and selling gross margin, if they're buying and selling lithium, like I for whatever reason, Enron came to mind, buying and selling natural gas in the early 2000s. Not to say these guys were Enron, but you think of buying and selling natural gas, those guys were doing it in waves. And SGML just got a deal with Brazil to buy and sell lithium. So they're going to do it to hedge and keep their prices. But they start becoming a stock, like the stock itself has rallied pretty good, but it's now starting to roll. So I think that, I mean, lithium prices, I think, are about to turn for the better in terms of slowing the decline to slow, because natural gas prices have stopped their decline and have slowly turned. So I would just say that there's a lot of price wars going on in EV right now. Tesla dropped its prices just to squeeze Ford and GM. So now everybody's going to start building batteries. Well, if there's so many batteries out there, is there going to be too much lithium ultimately with supply being too high? So I'm not, lithium may turn from here, but I don't think it rallies too much. I think the EV story is becoming a price war. And when there's a price war, everybody's costs get cut. I mean, it's just the way it is. So if the cost of lithium goes up, they'll stop building batteries because the key input. Also, I was reading in China that I can't tell you anything about these lithium markets, but there's a competitor to lithium that they're going into using in China. I couldn't even tell you what it's called. I don't even know. I couldn't even pronounce the name. But I'll just say that there's a lot of, like, when natural gas exploded onto the scene, everybody was drilling for it. Well, everybody's mining for lithium right now. And like in Nevada, there's a big story about the U.S. government preventing people drilling for mining under the satellites in Nevada. Well, there's an Area 51 in Nevada. Maybe that's why they don't want them to do it. But aside from that, let's just say lithium. I'd say lithium will probably stabilize around here. I don't say the outlook's great just due to these price wars in EV based on everybody mining this stuff. I mean, it took natural gas years to come back. Like it spiked all the way up to 12 or 13 BCF, fell all the way down to 2, which is basically what it did this time around. And it took several years to come back. So I'm guessing lithium will be much the same. I mean, didn't we fill buses with natural gas? And that was the fuel for the first EV wave of buses was liquid natural gas. And it took forever. So I'm guessing lithium runs into the same kind of problems, if you will.
Okay. All right. And so with that, we move into the 3Ls, which is it makes my week every time we get to this. All right. This week, we are still sticking with that earnings focus. We managed to dig out 6 names that are reporting. There are some big names in there as well. So are you ready to jump into this, Brendan?
Let's go.
All right. First off, we have Manchester United, MANU. They have earnings Tuesday pre-market.
So it's interesting. We talked about Manchester United. Once they had news to sell, it would move. Well, it moved. Holy moly. Moved like crazy. However, I think it reversed hard in 26-25. Looks like it wants to move lower from there. Interestingly enough, they keep losing deals on the transfer market. I wonder if they don't have enough money to spend to buy players.
Big speculation. All right. Jefferies, earnings Tuesday, aftermarket, JEF.
This has been a tough one every time we talk about it, but I'm going to leave it. Oh, did I say leave it for MANU? I think I did. Leave it for MANU now. Leave it for Jeff. Failed on the 65-week and looks like it wants to move lower.
Okay. General Mills, symbol GIS, they have earnings Wednesday pre-market.
So this is what we said will eventually happen, where you could keep raising prices to the moon and eventually your consumer will go away, and that's what's happening. So we leave it. It failed at 83 and looks like it wants to challenge the 65-week lower. It's interesting. Another consumer stock weakening.
Okay. Next one is Micron, MU. They have earnings Wednesday aftermarket.
Continuing the theme of broken ranges, we'll leave this one as well. It broke a range level and moving lower. Supports around 62.
Okay. Paychex, PAYX, they have earnings Thursday pre-market.
So continuing a consumer theme, Paychex looks like it wants to move lower, which is fascinating because Paychex is a play on interest rates, get the carry overnight, but are they dispersing less checks? So Chart's moving lower, so we'll leave it. Continuing as a theme, another leave it. It broke support this past week. Looks like it wants to move lower.
Okay, and the last one looking at, which sticking with that consumer sort of side of it, is Nike, NKE, and their Thursday aftermarket.
So this is the only like it this week. It has a nice turn a few weeks back, just like Boots, Walgreens. Now that I think about it, so maybe people are taking a jump into staples. Not that Nike's not a staple stock per se, but I like it. Thinking investors are seeing it. I think investors are seeing a good report coming. Could be a play on China too, which hasn't been a good call, but we'll see.
All right, Brendan, listen, thank you so much for your time this week. You have a great week trading.
You too. Take it easy.
And for everyone else out there, good luck investing.